5 crypto investment mistakes you must avoid in 2021. After a year of instability and financial disruption caused by the pandemic, many people are hopeful things will start to get back to normal in 2021, due to the vaccine rollout in some countries. Despite the global financial recession caused by COVID, one sector has ignored the trend and is expected to rise even further this year. And this is the cryptocurrency sector, led by Bitcoin. If you have some extra money and are willing to take a chance on a high-yielding, but at the same time high-risk investment, you should consider cryptocurrencies. But before you do, keep in mind that these digital assets are extremely unpredictable, highly volatile with similar chances of making a fortune or going broke. Remember the phenomenal rise of Bitcoin price, reached nearly $20,000 at the end of 2017, then dropping to about $3,500 in November 2018. Meaning that, it is important to educate yourself about crypto investing, and avoid unnecessary mistakes in order to get an advantage in the market. So, let's get started. Cryptocurrency investment mistakes to avoid. Number 1. Investing without knowing. The most important thing to consider when investing is to educate yourself and know what you're getting into, whether it's a cryptocurrency or another asset. You should allocate some time to studying the fundamentals of crypto investing, because it's still unpredictable and risky, and if you don't know what you're doing, you can lose your money. The basic things you need to know about crypto money. It is completely decentralized and unregulated. It's total digital, so not physically represented like paper money. In fact, cryptocurrencies exist only in computers. There are no central banks and financial institutions that will protect your crypto investments. Only you are responsible for keeping track of your own crypto money. Number 2, considering cryptocurrency is foolproof. Encryption does not ensure security. Encrypted means confidentiality, however, this does not eliminate the risk of cryptocurrencies being compromised or stolen. Don't share your keys with anyone. Everyone who obtains the keys has the ability to use them without your permission. Doesn't matter how popular and famous exchange is, don't leave your crypto coins there for long periods of time. Despite the fact that crypto exchanges have security measures in place, they are a common target for hackers. So consider storing your crypto coins in cold storage. Since these wallets are not available through the internet, cold storage or offline wallets is one of the best ways to store cryptocurrency. Number 3, investing all the money you have. Investment involves the risk of losing capital, especially if it is a crypto investment. You should invest what you can afford to lose only. You should be conscious that cryptocurrencies can disappoint you, because their value fluctuates based on a variety of factors. As seen in the cryptocurrency market, prices move dramatically up and down on a daily basis. So risking money you can't afford to lose is not a good idea. Number 4, making crypto investment decisions based on emotions. HODL, FOMO, and FUD are only a few of the acronyms you'll come across in the crypto world. Each of these describes a strategy, but it is also a feeling which shouldn't influence the investment decisions. HODL means to hold on to your investment, regardless of how volatile the market is, and that's okay if you are a long-term investor. FOMO, or fear of missing out, means buying on the hype, because you just want to follow the trend. On the other side, FUD stands for fear, uncertainty, and doubt. Even if the research stats, or market, indicate that now is a good time to invest in crypto, FUD may prevent you from doing so. Number 5, investing in just one crypto. One of the most common errors made by investors is to invest in just one coin. Despite the fact that all cryptocurrencies are related, some perform better than others. Without any question, Bitcoin is the most popular cryptocurrency. However, in many situations, unknown cryptocurrencies can rise by 300 to 400% in a single day, making them extremely profitable. So take your time, study the market, and invest in few cryptocurrencies. Indeed, the chance of making money might be better. Don't invest your money in just one crypto.